IonQ has transformed from a speculative technology story into one of the market's most closely watched growth stocks. The company's share price has surged as investors bet that quantum computing could eventually become a trillion-dollar industry. But here's the question nobody can ignore. Is IonQ still an opportunity, or has the stock become too expensive? The latest numbers give both bulls and bears something to talk about. On the bullish side, IonQ continues to deliver explosive revenue growth. The company recently reported another strong quarter, beating expectations and increasing its full-year outlook. Management believes demand for quantum solutions is growing faster than many expected, and the company continues to sign new commercial and government customers. One of the most encouraging signs is the size of IonQ's future business pipeline. The company has built a large backlog of contracted work that has not yet been recognized as revenue. That means investors are not simply buying a dream, they are seeing evidence that customers are already committing money to quantum technology. IonQ is also pushing aggressively to improve its hardware. The company recently highlighted progress on advanced quantum systems designed to deliver greater computing power and better performance. If those systems continue meeting development goals, IonQ could strengthen its position against competitors in the rapidly growing quantum market. Wall Street remains divided, but many analysts continue to see upside. Several firms maintain positive ratings, arguing that IonQ has established itself as one of the leaders in a technology sector that could experience massive growth over the next decade. However, the risks are just as important. Despite its impressive progress, IonQ remains a company valued largely on future expectations rather than current profits. Investors are paying a premium because they believe quantum computing will become commercially valuable on a much larger scale in the future. That creates a difficult challenge. Every quarter, the company must prove that demand is growing fast enough to justify its valuation. Even a small slowdown in revenue growth could trigger significant volatility in the stock. Competition is another major concern. Large technology companies, government-backed research programs, and specialized quantum firms are all racing to develop better systems. The winner of this race is far from certain. Investors should also remember that quantum computing remains an emerging industry. While the technology has made impressive progress, widespread adoption could still take years. That means patience may be required, even if the long-term opportunity is enormous. Looking ahead, the next major test for IonQ will be execution. Investors want to see continued revenue growth, successful deployment of new hardware, expansion of commercial partnerships, and progress on strategic acquisitions. If management continues delivering on those goals, the stock could attract even more institutional interest. But if expectations start running ahead of reality, the shares could face sharp pullbacks. For now,